Do you want a higher win rate? Do you want to have more winning trades and less losing trades? You as a trader can actually choose your win rate. This may sound very different from what you've heard before, but you are in control of your win rate. And in this video, I will show you how to get a specific win rate or to just change the win rate that you have with the help of the reward to risk ratio. So let's assume a trader has a trading strategy and he uses a 2-to-1 reward to risk ratio. This is the stop loss, the red one, the green box is the potential profit, and he gets out with a 2-to-1 reward to risk ratio. Obviously, there are many ways how you can achieve a 2-to-1 reward to risk ratio, and you have control over your targets and your stops because you are the one setting them actually. So let's assume that the same trader is using a 2-to-1, but it looks like this example. It is also 2-to-1, you can see 2-to-1, and the stop loss is twice the size, and then of course also the target has to be twice the size. It's still a 2-to-1, but it's a very different 2-to-1 ratio. Because obviously the holding time will differ significantly. You will most likely hold your trades for much longer because obviously the target distance is twice the size. So in the first step, it's important to understand that by controlling or by setting targets differently and setting stops differently, you have actually control over how long are you going to be in the trades. This, first of all, necessarily doesn't have to do anything with win rates. We'll get to that in a bit, but it is a first very important step to understanding how target and stop loss placement will actually impact your trading performance and your whole trading strategies. So you still have a 2-to-1 compared to the first scenario, but it's a very different 2-to-1 because you are going to stay in trades much longer. And if I've seen anything, I've mentored traders for years and years, and I have seen that holding on to winning trades can be a big challenge for traders. So a trader that is choosing his targets and his stops in a way that is not complementary to his personal mindset and his personal makeup and his personal strength will struggle right from the beginning. And even if you give the trader the best system, the best entries, if you then have an approach that with target and stop setting that is not aligned with the core strengths of the trader, you will immediately run into problems. So this is the first step. But let's assume you want to have a different win rate and you want to actually see what is the impact on my win rate. So here now we are talking about a potential trade, same entries, same stop loss as the first scenario, but we're using as well a different target. We are using a much bigger target. So let's get rid of this so it's not too confusing. And now you can see we have a target that is twice the size compared to the first one. Many traders will just say, wow, yeah, 4-to-1, amazing, I want to have big wins. But what happens actually? What will happen? First of all, your holding time will go up significantly, which is not great and which is not what most traders would like to see, because most traders would just like to be in and out of the trades. Holding on to winning trades, as I said, is a very big challenge, and it is difficult emotionally. And especially, what will happen if you have a wider target? Look at how the price moves. The price is not going up and down in straight lines. There are going to be those periods where nothing goes and when the market may go against you. And you have to remain in this trade and you have to accept that this will just take much longer, and sometimes the market will just not reach your target, and sometimes the market will plummet before that and it will turn around. So what will happen if you have a higher reward to risk ratio? The price will have a much harder time reaching your target, and very often the price will not make it to your target because your target is just much further away. And so naturally, it is common sense. A wider target, which then leads to a potentially higher reward to risk ratio, will ultimately lead to a lower win rate. So traders always think that, yes, I have a great high reward to risk ratio system. That's amazing. My winners are going to be huge and are going to make so much money on my winning trades. However, you're going to have more losing trades because the price has a much harder time reaching the target. So yes, a higher reward to risk ratio may be good for some people, but for the majority of traders, especially in the beginning, it will be absolutely devastating on your mindset, because this is common sense and your win rate will go down. There's no other way. Wider targets will be much harder to reach for the price because trends obviously don't continue forever. So a lower win rate and a higher holding time is a combination that, especially if you're new to trading, that is going to be very, very hard on your emotions. So this is not necessarily a good thing to have higher reward to risk ratio, which is a little bit something that most people don't talk about. So let's talk about a different scenario. Let's talk about now we use the same stop loss, but we use a target that is only half the size. So what will happen? First of all, your holding time will go down because obviously the target is now much easier to reach for the price. Second, your winners, the size of the winners will go down, which is not good for most people, but is what they believe. It's not necessarily true. And your win rate will go up significantly because the price will have a much easier time reaching the target. So now people say you cannot trade profitably with a 1-to-1 reward to risk ratio. That is absolutely just insane, and it's absolutely one of the dumbest things that you can say as a trader. Of course you can trade profitably with a 1-to-1 reward to risk ratio. If you have, for example, a win rate of, let's assume you have 70% winners, what does it mean? Out of 10 trades, 7 will be wins and 3 will be losses. And if you make 1 R on a winning trade, you will have plus 7 R. And for those losses, you have minus 3 R, sorry. So total, this is plus 4 R. So saying that 1-to-1 reward to risk ratios cannot be traded profitably is just such a dumb statement, and it shows you that the people have not comprehended statistics. And trading is all about numbers, and a 1-to-1 reward to risk ratio means that you need to have a win rate of at least 50% to break even. And if your win rate is above 50%, then just mathematically speaking, it's a mathematical truth, your expectancy will be net positive. And I mentioned it before, I think in a podcast a few years back. We had a dinner with a hedge fund trader, and he said, when talking about strategies, he said that he was trading a system with a 1-to-1 reward to risk ratio in his hedge fund trading strategy. And he does that because his win rate will go up significantly. His losses or his wins are not necessarily huge, but he said it's emotionally much easier to handle when you have more and frequent winning trades. And this is absolutely true, and it is something that many traders overlook. They always believe they need to have a huge reward to risk ratio, but obviously a huge reward to risk ratio comes at the expense of a lower win rate. So this is something that many traders overlook, and by just understanding of how those things interact, how does the win rate and reward to risk ratios with the target size and stop loss size interact, that is just such a big deal.